margins. The supply squeeze is inevitable given the current geopolitical climate.
Yeah. We are heading for a physical silver shortage. That's Frustex. And of course, Today, we're unpacking the silver war and its unprecedented impact on global finance.
It's a complete realignment of global economic power.
Welcome back to the podcast. I'm Alex, joined today by Jordan.
We are witnessing unprecedented whiplash in the silver markets. That initial spike was unsustainable, and the market hasn't priced in the scale of this structural transition yet.
Yeah.
So the shortage is inevitable. We're laying out the roadmap today for a high-stakes debate covering everything from industrial supply chains to current market volatility. The era of cooperation is over. The silver war has begun.
Yeah. And the immediate market reaction has been brutal.
Yeah.
The current volatility isn't just noise, Jordan.
Right.
We are seeing the early stages of a classic parabolic move driven by unprecedented liquidity.
We are witnessing a fundamental shift in the market dynamics right now.
Yeah. And that's exactly why this correction is so critical.
What we're seeing now is a classic case of retail investor behavior reacting to this specific type of volatility. Right now, we are seeing a perfect storm of three distinct drivers causing this unprecedented market volatility.
Is this just another bubble forming?
No, this is distinct. We are witnessing a permanent step change in structural demand across these industries. We're seeing a distinct phase of institutional accumulation here, driven primarily by shifting industrial demand. Right now, we're seeing a lot of emotional volatility in the short term. But if you look at the fundamentals, they remain incredibly strong.
When you analyze the previous booms, particularly the cycles in the 70s and 80s, the geopolitical factors played a significant, often overlooked role.
Right.
Are we seeing a fundamental shift in the market right now?
We are. This time is different because of the unprecedented structural demand from these new energy sectors.
Yeah.
The issue isn't temporary market fluctuations. We're extracting from deeper, lower quality reserves, which means enduring scarcity.
Historical corrections are lessons. 1980 saw a 70% crash, 2011 about 35%. But back then, this isn't just a cycle, it's a structural reset in how capital evaluates risk globally. How absolute is their control right now?
They are establishing a vertical monopoly across the entire supply chain, from extraction to refining.
So the data shows a slowdown, but you're saying it's intentional?
Exactly. State control is reshaping these flows entirely. You have to look at the industrial demand curve. This isn't just about jewelry. It's foundational to every critical technology we see here.
Right.
Strategic leverage today isn't just about the finished product. It's about controlling the raw materials that feed the entire supply chain.
Yeah.
A true strategic response requires securing the supply chain domestically. We need to look at long-term contracts with our clients. The data clearly shows that nations prioritizing strategic infrastructure today will dominate the geopolitical landscape tomorrow.
Corporate demand for EV batteries is skyrocketing. This necessitates a complete restructuring of the industrial supply chain, particularly regarding raw material sourcing.
We're projecting that EV production alone could consume 50% of the global annual silver output within the next decade. And corporations have realized they need to control the front end of this supply chain immediately. And what we are witnessing now is the absolute shift from paper markets into physical control. The industrial rules are taking over.
It's not just about the immediate demand then?
Exactly. Silver is the linchpin for every single one of these high-tech sectors we're discussing. But doesn't the market dictate the price?
Not anymore, Jordan. The reality is that corporate control over physical supply chains is au conseil of Dippertree.
The story of bank dominance in the silver market isn't new. It's a historical manipulation, decades of
We're witnessing a massive shift. The reliance on paper exposure is ending, and institutions are demeters. What we're witnessing is an unprecedented shift, a physical demand wall that's going to change everything for retail traders. We are transitioning from traditional price discovery into scarcity discovery, where the physical reality sets the price. They are completely overextended in the paper markets.
Exactly, which makes physical delivery the ultimate strategic endgame.
We have to maintain a long-term perspective. What the market is showing now is simply a healthy correction, consistent with historical volatility patterns. The way to look at these modern corrections is not as failure, but as strategic accumulation.
Exactly. And we are seeing that behavior from sovereign and central bank buyers.
What we're witnessing isn't market panic. It is, in fact, deliberate strategic positioning on a global scale. When we look at the long-term outlook, the data suggests that scarcity is actually going to drive the next wave of growth. The strategic importance of silver has shifted entirely. It's no longer just a monetary metal. It is now industrial leverage. The strategy is clear. We build resilience through domestic production and unshakable allied partnerships. We're seeing incredible strides in innovation right now, specifically in how we mitigate material scarcity through advanced. The U.S. isn't reactive. It's building resilience, absorbing volatility, and maintaining industrial leadership.
Imperial.
With all this volatility, what should individual investors actually do? Prioritize over hype.
Every dip increases position strength, compounding long-term holdings.
Which is crucial given mine development timelines create structural supply deficits. The real demand driver now is industrial use, specifically in tech applications.
Exactly. It's less about the speculative investment angle.
How do you typically see market participants responding when volatility spikes?
That's where discipline overrides the hype.
Market corrections are common, but these frameworks ensure long-term stability.
Projections show sustained industrial demand regardless. Discussions around silver now extend beyond price movements to include industrial usage and long-term planning considerations.
And
We aim to provide clarity, not just promotion. Thank you for joining us as we analyze the forces shaping the global markets.
So this really highlights the complex interaction between industrial systems, finance, and geopolitical considerations.
Showing bets is bringing more sure sense.
Our audience follows these discussions to better understand evolving market structures and strategic decision-making. It's really about maintaining that ongoing analysis to understand the long-term shifts.
Absolutely, keeping attention on those structural dynamics.
And with that, we conclude this session. Thank you for joining the Global Finance documentary discussion.